The headlines rolled in this week hot and heavy, and they weren't positive. Let's dig in. Good Lord, it was a bit much this week. See, I typically consume content during the week and then sit down on Friday and collect my thoughts and start working on a show for Monday. But I gotta say, it was a heavy week. Each article I read, each report I consumed felt like a weight, and the more I read, the more I felt weighed down. And if I'm feeling like that, I'm guessing you guys are as well. So let's process this all. Here's what I'm talking about. Check out these articles from just last week. Blend lays off 200 workers as mortgage industry sputters. Forbearance plan volume edge higher mid-month. Lend US, which is RPM Mortgage and American Eagle, acquired. Fannie Mae cuts origination projection, forecasts recession. Some lenders won't survive the purchase mortgage market. Sheesh. Better institutes third major layoff. Home buyer demand dips, market cools down. Americans are binging on credit card debt, fastest rate in 22 years. Mortgage rates are even higher than you've been told. Oof. And the last one that got my attention, Q1 2022 sets new foreclosure high. Whew, wow. It's pretty bad out there right now, isn't it? I mean, the sky is falling. We should probably go buy gold and bury it in our backyard and like hoard goods, right? I mean, I kid, but that's what one would think if you guys do what most Americans do and just consume content with the drive-by media mentality. Scrolling Facebook, Twitter, and the interwebs and just reading negative tweet after negative tweet, scary headline after scary headline. No wonder everyone on Facebook is so angry and down. Guys, go outside, soak up the sun, break bread with your friends, go to happy hour, and finally actually read the articles, dig in, get proper context. That last story seems scary. Some of you probably actually reposted it, but it took me 2 seconds to really figure out what was going on, and the author even states, overall, American homeowners are in a good position to avoid foreclosure. What the heck are we talking about then? And then they compare 2022 foreclosure stats to 2020. Well, I don't remember having a foreclosure problem back in 2020, so comparing the two is just odd. I mean, I could see the concern if we were comparing numbers to 08, but 2020 is just a non-story, and you'll figure that out if you dig in. Are some of these stories concerning? Sure, maybe, but does a merger and an acquisition mean anything to you? Not at all, unless you were part of it, and even then it might have been a good thing. Yes, rates are higher. Yes, volume is slowing down, and the market is contracting. That's what happens after the most prosperous time in real estate and lending ever. Things cool down and return to normal. Layoffs need to occur. It's part of the cycle. We had tons of jobs to fulfill all the record volume in 2020 and 2021. Now that has cooled off and we don't need as much help. But guess what, guys? There's still massive opportunity out there, and I don't want you all to get tricked into thinking otherwise by reading all the drive-by media tweets and stories. They get you in a negative mindset and trick you into believing that the game is over. It's not. Heck, we have more purchase money this year, $2 trillion, than we did purchase and refi business combined in most of the years from 2008 and 2018. Look up purchase and refi totals for any of those years. Say 2015, probably a pretty good year for most of you. Yeah, only 1.7 trillion in total business. That was purchase and refi business combined. Again, to compare that, 2022's purchase opportunity alone is $2 trillion. Let's get our minds right, guys. Heck, 2018, not that long ago, only 1.6 trillion in total business. To really put this into perspective as to where we are and where we've been, since 2004, when I got into business, the mortgage business typically clips along at a $2 trillion rate. That's total purchase and refi business combined. Some years were less, some were more. We had some years at 1.5 trillion, some just over 2 trillion. But average them out, it's about a $2 trillion run rate. 2020 was double that at $4.1 trillion. And 2021, believe it or not, was even better at $4.8 trillion. So yeah, 2 amazing years, smashed all the other previous years. Things are gonna come back to normal, they have to. Is your income and volume going to reflect that? Yes, of course it is. $4.8 trillion is just ridiculous and not sustainable. But again, we'll have more opportunity in 2022, $2 trillion in purchase business alone, than many of those years combined. Focus on the opportunity, not the adversity, and be thankful for what the past few years brought us, but realize it wasn't sustainable, guys. We are good. Focus on the opportunity, not the adversity, Share this today. You guys know so many people that need to hear this, and we'll see you guys next week.